Got to get some unusual activity, Pete. You've been watching the metal stocks, mining stocks.
Well, these metals have been on fire. And if you go back about a week and a half ago, 2 weeks ago, they started buying many of the different gold mining stocks. We looked at Barrick and several others, Kinross, across the entire sector. The GLD was hot. SLV earlier this week on Monday, they were buying the May options that actually expire tomorrow. Those have already tripled this week just because of the fact that it's just had such an explosive move. But the steel stocks have not fared well April, May. Look at U.S. Steel, some upside activity there, but it was AK Steel today that really stuck out. 24,000 options in the first 90 minutes traded, 22,000 calls. The focus was June upside, but then really moving out to the July 16s. The upside calls about $1 out of the money, very, very active.
All right, let's put our ear to the wall right now. Borrowing costs for some of Europe's most indebted nations fell today on reports that China is interested in buying bonds to fund Portugal's upcoming bailout. We also saw the reaction in the euro, which moved higher against the dollar. So, will China swoop in and save the developed and debt-laden economies of the world? We're joined now on set by Peter Schiff of Euro Pacific Capital. Peter, it's great to see you in person.
Nice to be here, Melissa.
What would your bet be, that China does come in and buy these euro bailout bonds?
Well, if they do it, they're going to do it by selling dollars. I think it's interesting that they want to diversify into Portugal. I mean, that shows you how weak they regard the U.S., that they'd rather have Portuguese debt.
That's pretty terrible.
What makes sure it's either or?
Well, they don't have an unlimited amount of money. And so any reserves that end up going into European debt is money that would have gone into U.S. debt. That's why Ben Bernanke is buying so much debt, because foreign central banks are not buying enough of it. And that's why I think Ben Bernanke is bluffing when he says QE2 is going to come to an end over the summer, because he's really the only buyer, and he's not going to step out of the market.
So, Peter, you're saying that the Chinese think that Portuguese and Greek debt is more creditworthy than the U.S., and that's why they're going there.
Well, it's a beauty contest, but unfortunately, we're both ugly. They're just less ugly. But yeah, and they're loaded up with dollars.
As opposed to the fact that they dumped a ton of money in Europe for some of the reasons you talk about. They want to diversify, and they absolutely don't want to have, they definitely don't want to be tethered entirely to the U.S. government. But to say that, if anything, I would say they're there to protect their interests, because they can't see these guys default, because they will be on the hook. They've been investing in European sovereign bonds for, at least the inception of the euro. So they're just as tied in there.
In many cases, it's not really protecting their interest as their positions and throwing good money after bad. At some point, as a trader, they have to understand that the more money they throw down this rat hole, the more they're going to lose. And that's particularly important with the United States, because they have, so much of our debt, and we're asking them to buy trillions and trillions more. And they have to know that we can't pay back what we've already borrowed, let alone the trillions that they're going to have to keep lending us to keep this phony economy propped up.
So, Peter, when you look at the value of the U.S. dollar, you've got a little bit of a recovery here in May. What's the path for it?
Oh, it's down. I mean, look, the New Zealand dollar hit a new 52-week high today. The reason I mentioned that one, it's relatively thin and less liquid, and you see a big jump, almost 1.5% new 52-week highs. I mean, I don't even know the last time I've seen it this high. So it's multiple years, not just a 52 weeks. So, you're looking at a weakening dollar, and look at the Swiss franc. You can't just compare the dollar to the euro, because the euro is now it's not like the Deutschmark anymore. You got the Italian lira in there, you got the Greek drachma, but you know what? It's still stronger than the dollar. Even though we've had a little bit of a pullback in the euro, look at the trend. It's strengthening versus the dollar. And of course, gold hit a new record high against the euro this week, which shows this is not dollar strength, this is euro weakness.
Peter, you talked earlier about QE3. Is that your base case scenario, that there will be a QE3, or is that sort of just the extra juice to your investment thesis, which is already intact?
No, it's going to happen. I mean, the Fed's going to do QE until there's a crisis. They know. I mean, the analogy, people have said that QE is like the training wheels, and now the bicycle is moving along on its own, and it's time to take the training wheels off. Well, the Fed knows that QE isn't the training wheels. It's the only wheels, and they're not going to take it off. But the problem is we're bicycling towards the edge of a cliff. We need to take those wheels off.